me. My name is Kalu Aja, and of course, on this space, personal finances, and of course, we are talking your money, right? So welcome, guys. This week we are gonna do taxes. That's the topic, right? And it's because the tax law is out there. The tax law is out there, so we've got to understand it, so we can then know how to apply it. Taxes are going to be, I would say, the largest expenses that you're going to make, right? Most likely expenses you're going to make, maybe going forward. So you've got to understand what the tax laws are, and of course, how you can then sort of navigate that tax law and be a better citizen. Now, to be clear, paying taxes, paying taxes is a patriotic thing to do. Avoiding taxes is also a patriotic thing to do. Why? Taxes are not just about revenues. Taxes are not just about revenues. Taxes are also how the government redirects you to spend your money. So when the government says, for instance, that we want to tax cigarettes, the government is trying to make revenues off you if you smoke cigarettes. The aim is to discourage you from smoking cigarettes, so that way their cost of health doesn't really go through the roof when they're treating you down the line. Same with this tax regime that the government has passed. When the government says, for instance, that we are going to tax you, but we will give a tax rebate or tax exemption if you pay into your, share the slides on YouTube and also on Twitter. And I'm going to try to do a presentation mode so that way we can sort of follow some great visuals I have done. Let me find that. I'm just going to do YouTube so you guys can actually follow. So there it is. And then we can start. So I got my PowerPoint there. I'm going to share. So YouTube folks, just give me a thumbs up or so. If you're on the space and you're on YouTube, just let me know if you can see the slides. And I'll also share also here on Twitter so we can essentially start, guys. You have to get that all sorted out, and then I will take you guys on this journey about taxation, right? So the very first thing to say is that tax avoidance, guys, is legal. If you are avoiding taxes, that is a perfectly legal exercise to do. If you are evading taxes, that's a different matter entirely, right? Because you don't want to evade taxes. Mr. Al Capone was arrested for evading taxes. So we don't want anyone to evade taxes. We basically want you guys to learn how to legally avoid taxes. Let's go on my next slide. This is not investment advice. I don't know if you guys at YouTube can see this, but essentially this is not investment advice. I'm not your investment advisor. I'm not trying to show you or sell you any product. Speak to your investment advisor before you do anything. Don't rely on this presentation as financial advice. So talk to your tax professional, and this is not investment advice. So let's go straight into it, right? Tax avoidance is legal. Tax evasion is illegal. The tax reform offers many legal pathways to avoid taxes. So everything I'm going to share with you today, everything we are sharing with you today, no. We are sharing with you what is already in the act. And of course, that's what we're going to talk around. So again, I don't know if YouTube folks can see this. The Twitter guys, I've just shared you my first slide. Yeah, let me see chat. Let me know in the chat if you can see them. But the first thing we want to talk around is who is going to pay. So first of all, the first thing you have to understand is this. Who is going to pay taxes in Nigeria? Residents. That's the very first thing, right? Because you've got to say, the screen is black. You've got to say, first of all, who is a Nigerian? Nigerian doesn't mean who has the passport. Nigerian means, as a taxman has defined it, who is a Nigerian resident. The first thing is that if you spend 183 days in Nigeria, you are a Nigerian under tax purposes. That means if you're an American citizen, but you spend 183 days in Nigeria, or you maintain a permanent home in Nigeria, or you have significant economic or family ties in Nigeria, right? Or you have employment elsewhere. You don't do any of that. You don't live in Nigeria. You don't have a permanent home in Nigeria, but the economic activity that you are earning income in Nigeria, you are not being taxed in your home country, a taxpayer in Nigeria. So that's the first thing. So let's say you do not have any substantial quote unquote business in Nigerians. We will tax Nigerians based on their income in Nigeria, but you are not a resident in Nigeria. That's what would apply to you. If you don't have a double tax arrangement, then you're not resident in Nigeria. The income you're making in Nigeria, if it goes to your bank account, sure, file taxes, but you are not a Nigerian. So that income stream is not applicable to personal income taxes. The same way we won't tax a foreigner. If a foreigner had homes in Nigeria, 85 days, that's half of the time in Nigeria. But you are also living in the US or in the UK, then you are Nigerian. So if you are Nigerian, then you have to file taxes in Nigeria. You cannot claim the foreign status and then say you will not pay taxes. You can't say, I have an American passport, thus I will not pay taxes for income I have earned in Nigeria. It wouldn't work that way if you spend more than 183 days in Nigeria. So what's the way to avoid Nigeria? If you're going to spend a lot of time in Nigeria, be aware that the magic number is 183 days in Nigeria. If you spend 183 days in Nigeria, you have a permanent home in Nigeria, you have a significant economic activity in Nigeria, and if you are not, you don't live in Nigeria and you do a contract in Nigeria, but you don't pay tax when you get back to your home country, then of course you will also be taxed in Nigeria because that economic activity happens in Nigeria. So the first way to look at it is to say, listen, if you are going to if you have a foreign passport, be aware of the number of days that make you a resident of Nigeria. Once you're a resident of Nigeria, then this law applies to you. If you're not a resident of Nigeria, then these laws will not apply to you, right? Because you're a Nigerian by birth, and you spend 200 days in Nigeria, then for the purposes of taxation, you'll be taken as a Nigerian, and of course, you would then pay those taxes. I hope that's pretty clear how we want to differentiate. Now go to the second thing that we're going to talk around, right? Which is going to be how then to avoid. Let's now go into the business and say, how can we then avoid? The first thing there is what we call the income strategy. Income strategy. The law says, and I'm going to share the slide again with you guys on Twitter. The law says that if you earn less than 800,000, then you will not pay any tax if you earn less than 8. What basically want to earn a lot more and then find out the legal ways not to pay tax on that. Now, I did look at all the provisions. The one that I do like, that I think makes more sense for us to really talk around, is the one around the Pension Reform Act. That's the one I think that makes more sense to us to really focus on and to speak around. So again, on Twitter, guys, 100,000. I want you to really look at your retirement savings account as your key is 700,000 naira. So anything you contribute to your retirement savings account, you deduct that from your income, not as an expense. No income is 700,000 because you've taken away 300,000 to your retirement. 18%. That's the statutory limit. 18%. Get that, you've qualified. I'll talk about the real avoiding taxes. We want to avoid taxes using what we call the additional voluntary contributions that you can make on your, if you use the excess of that 18%, you take that off your income. If you don't earn the income, then you're not paying the taxes. So as much as 1/3 of your salary is available for you to contribute. So let's say I'm working today and I keep on contributing my additional voluntary contribution. First of all, I'm reducing my tax income, my assessable profit, what they will tax me. I'm reducing that. But in 6 years, if I want to buy land, I want to japa, I want to get married, whatever I want to do, I can take away the contributions I have made, 50% to my additional voluntary contribution. I can take it away tax-free. The other 50% voluntary contribution, you can remove in 5 years without paying taxes. So if you're a high income out, if you say you are going to retire in 15 years, right, you can start to deduct those funds today, salary to your additional voluntary contribution. you have shielded that from taxation after 5 years. I like this one because it gives you the power to plan how much you want to deduct or withdraw after 5 years. Now, the question is going to be, or you're just a hustler or you're a content creator, you have to go and open a retirement savings account. Then you have to put in that retirement savings account the money that you're making. Pay yourself a salary. The X time, it comes like that. And there, you can take out 5 million after 5 years. If you ladder it properly, you can receive tax-free income and you can get that tax-free incentive. So we've talked about number one, where you live determines if you pay taxation. So if you have an American passport, but you do business in Nigeria for more than 183 days, or you do substantial business here, or you maintain a permanent home in Nigeria, be careful. You're going to be exposed to paying 3-day limit. That's the first thing we talked about. Now we're talking about your retirement savings account, how you can use your retirement savings account to take your active life insurance, what you pay as premium, and what you pay for your spouse as premium. You deduct that also above the line from your income. So if you buy a life insurance policy of maybe 5 million naira, whatever premium you pay for yourself and your wife, you deduct that from your income, right? That's essentially, you don't put the money in insurance, and then when insurance pays you, no, it doesn't give you that bank. But still, say paying 18% tax to paying 25% tax on the tax table. This is how you want to use this life insurance policy, the annuities, the NHIS, the NHF. This is how you want to use it. If you look at the tax table, guys, you'll see your first amount, your next amount, you see the taxes you pay on the right-hand side. If you are $1 million naira between one tax bracket and then qualify for the higher tax bracket. So it makes sense to look at your income, look at where you found the tax bracket and say, can I buy my way into a lower tax bracket? And say, oh, if I buy insurance premium, whatever I'm buying, I'm reducing my taxes. This is a above the line reduction. If you earn $1 million and you pay 100,000 for insurance premium, 100% guys, 100,000 naira guys pay 5% income. You want to see if you can use these deductions and buy yourself into a low way. And I want you to give me back this money in 5 years' time. All that money you buy, all those things deferred, or the payout is deferred. Once you pay for that premium for deferred annuity or life insurance premium, you pay no taxes, i.e., they reduce your income based on what you pay. You're able to write off your income to the amount that you pay as a premium for life insurance and for deferred annuities. NHIS, National Health Insurance Scheme, anything you pay as premium, you also deduct. Nigerian Housing Fund, you can pay statutory 2.5% of your income to NHF. If you pay interest on a mortgage on a home that you live in, primary residence, you can also deduct that from your income, so it reduces your income. Rent is kind of different. Rent is just going to be a 20% of whatever rent you pay. It's not top line or bottom line. It's just going to be 20% of whatever rent you pay. It's capped at 500. You cap it back to 500,000. So if you pay rent of 10 million, 20% of 10 million is 2 million. You only claim 500,000. So it's not really that. It's to reduce your taxable, what you pay as tax, but it's not going to reduce your above the line. We are interested in above the line deduction, which is your pensions, your life premium, annuities, your NHIS, and your National Housing Fund. Why are we interested in those ones? Because they reduce your taxes above the line, which means that your income, the income you earn is reduced, which then means that the taxes you pay, your tax rate is going to be a better tax rate because you are reducing your earn 5 million. That's what I'm saying. You are going to use these deductions to representation. I call this the passive income strategy. And these are, should we say, laws that have, or should we say, opportunities that are in the act that the taxman has told us that, listen, guys, if you do this, we will not charge you a tax. That's what these are. If you invest this way, we will not charge you a tax. And I don't know, just want to make sure the guys on Twitter are following or are seeing the PowerPoint slides that I'm sharing. I've shared about 3 now. If you can circle a thumbs up that you are following, and you can see the slides I'm sharing, just to make sure I'm carrying you guys along, because a lot of figures. I want to just give me a thumbs up if you're on Twitter and you can see those slides that I'm sharing. I really would appreciate that. Yeah, I know the YouTube guys can see it, but perfect. Thank you so much. Let's come to our passive income strategy. What is this? Is this? If you earn income, you pay tax on your income. That's how taxes work. You earn income, you pay a tax on your income. But the tax money is saying that we are going to give you certain incomes are exempt to be exempt in Nigeria. Number one, if you earn dividends, interest, rent, royalties outside Nigeria, and you bring it into Nigeria to invest, that you generate from those, especially if you bring it in. If you take 50 million of that 100 million naira, 50 million, let's just say you take 30 million, you bring it back to Nigeria the next year. You know, this first year you earned foreign asset class. That comes income to you, but it's not taxable. So the first year 30, you do a table. Next year 30, your passive income are no longer taxable to you. If you buy property in the UK, Nigeria, it's not going to be taxable to you. Dividends, interest, rents, royalties derived from outside to Nigeria through approved channels, it's tax exempt for you. That's the first one there. So your mind is now thinking, oh, wow, I can take Naira. Income I have in Nigeria, I don't pay tax on it. Your mind is thinking, I can see your mind's working. What else? If you have a Nigerian company that is doing exports, remember, wholly export. If all they are doing is exporting, any profit that company makes, zero taxes on it, right? Or if you export cocoa and you bring the cocoa proceeds back to Nigeria, that money from cocoa back to Nigeria, you don't pay tax on that money. So what if I had 100 million naira today and I went to Akwa Ibom, if I could get, because it's very, very hard to get cocoa today. I go to Akwa Ibom, I buy cocoa, and I take that 100 million naira and I export cocoa out. They buy the cocoa in Holland, they pay me euros. Maybe, I don't know how much it's going to be, maybe 10,000 euros. The 10,000 euros come back to my DOM account. Nigeria is saying that you will not pay tax on that 10 million. Remember, you're not going to pay tax on the first 100 on your naira, because you are using that money to do a business to export the cocoa. The cocoa comes back, you don't pay tax on that. Also, if somebody is selling vegetable to export vegetables to Canada, whatever profit you guys make, that income in this activity, export activity, it has to be only export. They can't be doing it. Is telling you that for you to be a patriotic Nigerian, they want you to go and export. The more you export, the revenues you get from export, as long as you bring it back to Nigeria through approved channels, of course, it's tax exempt for you. So again, your mind is now working. That means that all those, you can get up a few boys, set a company of Nigerian clothes. I can export palm oil, I can export cocoa, whatever it is that you want to export. Take your naira, do that export, bring money back to Nigeria. It's tax-free. It's tax-free, guys. This is the law. Everything we're quoting here, because the government wants you to do exports. And the more you export, the more you're going to make money for Nigeria. That's why they're making it to you tax-free. So your brain is working. Yep. You are married. Your husband is not employed. You are a breadwinner. You take money, you set up a company owned by yourself and your husband. That company does exports. That's it. All the money you make goes to that company. The profit you guys make is tax-free. The costs of the company are tax-free. The dividend the company pays, dividends distributed by an authorized collector. You see, you go to your stockbroker, you see invest in mutual fund this, or invest in ETF that, venture capital, PEs, private equity. Any funds you invest and then you get dividends back from these companies is tax-free. Again, How much do I need to spend? I need to spend money on food. Okay, the excess, what I do with the excess, I buy, as long as it is authorized by the Nigerian Security and Exchange Commission. If it's tax exempt, it's gone. You're going to get that money back from them without paying taxes. Why? The government wants to encourage you to participate in the capital market. So it's giving you a tax-free, it's tax-free. Venture capital, they pay you back, it's tax-free. ETFs, exchange traded funds, you put money, they pay you back, it's tax-free. Sure, you have to put in 100 million to get 10 million, Abi, but that 10 million is tax-free, so increasing. You don't pay, it's in the law. Fantastic, guys. Thanks for the so everyone will speak, don't worry, we'll speak. Profits on a company engaged in sporting activities. If you have a company, let's say again, the wife is working, husband is not working. Husband is if it follows Chelsea, baking, it's not going to be taxable. Now I confess, I don't know what they mean by sporting activities. It's a beer parlor where you watch Chelsea beat Arsenal. Shoes in a bar, sporting shoes in a bar. Is it a sporting activity? I don't know. But this is what they are saying, that if you have a company engaged in sporting activities, then that company is going to earn income that's going to be tax-free from you. And of course, the one that we all know, if you buy federal government and state government bonds, you get a tax exempt because the income that's going to come to you, you are lending money to the government, so the government is not going to tax. They want to encourage you to lend to them. My disappointment here is that it did not include local government should be able to borrow. It doesn't mean you should go and give them money, but they should have included them as well. But any income that you make from a state, a federal, or local government is going to be exempt from taxes. So guys, what are we saying here, right? We are saying that if you are able to invest in any of these activities, the income you are making is going to be tax exempt. Remember, guys, the whole idea is convert your active income into passive income that is tax exempt. That's the game. Convert your active income into passive income that is tax exempt. For money and overall, capital gains means if you buy a car for 100 naira and you sell that car for 200 naira, if the proceeds are less than 150 million, they won't tax you. If the gain is less than 10 shares and my profit is not up to 10 million, I make 2 land in less than 1 year, it's not, you get no more than less than 150. So the whole transaction should be less than 150. And I don't gain less more than 10 million in 12 months. So you don't pay tax on that. So if you don't like something, if you bought something, you want to sell it very, very quickly. If you allow it to accumulate interest, of course, you then go into paying taxes on that, which is not bad. You've made your profit. So you will still pay tax on the profit. But if you don't want to pay tax at all, dispose early, because it's going to be once it gets more than 150 million, then it's exposed to capital gains. But again, it's not a bad deal. You've made money. That's fine. But what about private residences? The law says that even if I sell a private residence for more than this 150 million, right? If it's my private residence, I don't pay tax on the sale of my private residence. I don't pay tax on the sale of my private residence. So let's say I have a house in Ikoyi. It's worth 150 million naira. I can gift that house to my daughter. Because it's a gift, my daughter will not pay tax on that gift. My daughter is now instantly worth 150 million naira. What if she sells that house? What if she sells that house? Well, she's not going to pay capital gains tax because it's her personal residence. She has to stay live in that house. I would just suggest maybe 5 years, right? So because it's her personal house, capital through a gift, I would say hold it for 5 years and sell. Because it's your personal home, your castle is tax-free. She's not going to pay time exception. So if you have this big house that you're not going to use, and you have kids that you want to give them money today, think about this. Give them the house. They have to live in the house as a primary residence. If they sell that house and go to Canada or go to the village, it's their money. Because it's their personal residence they are selling, they are not going to pay tax on that transaction, capital gains tax on that transaction. So that's another way for you to structure gifting assets, not just to give. We know gifts are free, we already know that. But because the person you are gifting to can dispose and get that income tax-free because it's a prime residence, just a house, and it's of course going to be tax-free. Then the last one here is going to be your pension company. So if you want to work for anyone in Nigeria today, you want to make sure you stem for tax-free returns. So if you have two choices, one pays you pension, one doesn't pay you pension, ask the guy, housing and transport. Everyone has got to insist on this from the guy employed. But if you don't do it this way, you can't get that tax break. You've got to file your basic, your housing, your transportation to be able to get income taxes. So I'm now assuming here, these things are all in the void taxes. So I decided to do it. But yeah, I'm not giving you any. I'm telling you, if you do this, you will not pay taxes, not me. The government is wanting the tree. You don't have to go in and say, okay, I'm going to find this tree in this. First, make this point. This space is only for personal taxpayers and small and medium enterprises. If you're a PLC, big boy, go and hire your own tax lawyer. You have lots of ways. Small firm that wants to know also how can they apply a few the things that tax to reduce their taxable income. This is who this space is for. It's not for the guys that can afford a lawyer and all that, right? So I think this first point really tells you all you need to do to avoid tax as a personal person. All you need to do. Any profits or gains of any company or enterprise deducted all expense for the period, any income that any company can show was used wholly and exclusively to make income is tax deductible. And you buy diesel to run your fuel, as if you're a content creator and you buy a camera, you pay Agboro for the right to film, you pay for buses, you pay for lunch. All those things are tax deductible because you are using them to create income in the production of income. If you are Davido, I've used this example many times, and you buy a Lamborghini, that Lamborghini is tax deductible because you're using that Lamborghini to do videos for your home, for your music videos, which generate income for you. So any company at all that is using any expense wholly and exclusive to generate income, you can write that income off. This is, of course, in line with agricultural export. We said before, if you export anything in Nigeria, you don't pay tax if you bring the money back. For 5 years, this is separate from that. 5 years, no taxes. But I'm saying this is after that 5 years, any expense that you use to make income in that farm is also going to be tax deductible. Now, in the tax law, we define a small company as 250 million. There's 50 million, there's 100 million in the Tax Act. Mr. Taiwo has clarified that 100 million is the right number. So hire your accountant, look at what you're doing in your operations and say, okay, hey, how can I legally avoid taxes again? But they've already given you the answer. Any expense you use to make income, you can deduct, including VAT, which we're going to talk around now, right? Any income you use to make your income, and certain exemptions as well that you can also add to deduct as well some incomes. We're going to the second to the last slide, guys. So, yep, we're nearly there. Copy. I'm just going to share with my folks on Twitter who have always been with me all year. Merry Christmas to all my Twitter folks. Love you all like mad. So now we are talking exemptions, right? I want to just highlight these exemptions for the business people out there. If you pay any interest or on debt employed, income for the trade, business or profession, you can write that tax off. So if you borrow money and you are paying interest on debt, is expansion, you can write off. This says business, profession, or vocation. So borrowed money from a bank to do that business, to buy the drone, to pay all those people, you can write it off your taxes. That's what the law is saying. Keep your receipt. You call a electrician, keep your receipt. That's the point. It's for whatever small enterprises now, yeah, are happier. They stay more with you because they can also then do additional voluntary contribution. You are gaining, your employees are happy. Why would you not for employees? Doesn't make any sense to avoid or to ignore this exemption for you. Rent. If you are paying rent, you can also write that off. And it says in respect of land and building occupied for the purpose of generating income. So if I'm a farmer and I rent land, I can write that rental off my tax income. So you've got to have an accountant talking to you. You can't do this by yourself because an accountant is going to tell you more of this. Is just what I brought out on PowerPoint. Your accountant is going to tell you more about things like this. Any salary you pay, you can write off. Any cost to the company, you can write off. So don't owe your employees salaries because when you pay them a salary, you write it off. Nigerians pay salaries, right? So nothing we have said here is illegal. Everything we have said here is part of the Pension Reform Act. Everything we have said here. Now, our second to the last slide, we're going to talk around some special exemptions there. Just want you guys to be aware of them. This is going to be all VATs, VAT going out, VAT coming in. Why? Because there is this input tax you can claim back. So if you have a company and you buy and the company charges you VAT, just assuming they charge you VAT on a diesel. Now you can claim that input VAT, you can claim it back and in an equipment, you can claim that allowance over years and say, oh, I bought generator, I'm going to claim that cost of generator as a capital allowance in running my business. There's not this economic development tax incentive. It's now replaced, I think, the pioneer taxes. So before in the pioneer taxes, if you invest in a rural area where there's no water or power, you could actually claim 100% of that investment out of your taxes. So let's say you want to manufacture socks. If you manufacture socks, just an example, in Lagos has water, power, and roads, no exemption. But if you go to your village where there's no power, water, roads, and you set up a socks factory in your village, you are able to claim a lot of those capital expenses out of your profit because there's no road there. So government's going to say, because we didn't give you power, we're going to allow you to claim a lot of that as tax incentive. That's what they're saying there, guys. Yes, guys, so we're going to allow you guys speak now if you have all those questions. Finally, guys, let me just close by saying most of what I've said here, even before the tax law was passed, we already had these things in my book, right? This thing was already in my book. Some things have been rehashed. Maybe they increased the amount or they said it formally, but some of these things have been there. And if you had gotten the book, which I'm now shamelessly plugging, you would have seen most of these things in the book already. And you would have also prepared yourself for this because you want to get ready. The main thing about this tax reform is that there are many things that you have 1 billion, you are going to pay taxes because you have not filed. You've got to file taxes to be able to get the exemption. So don't assume I'm not going to file, I earn 50K. More knowledge implementation of that knowledge is very, very important. So like I said today, I have shared with you guys a lot of things, right? It's going to be recorded. These slides are there. Go and show your tax accountant and ask your tax accountant, hey, this guy said this. Is it true? How else can I take advantage of this? Make sure you also do your own verification. I'm human. I could be your tax guy before you invest. Most of these are generics that most people know. The idea is this: if you don't pay taxes, you have more money to consume. The more you consume, the more the economy is in the government to improve the GDP and the consumption by avoiding taxes. That's why you see, how are you? Thanks for hanging in there. What's your question?
Thanks for the opportunity, Mr. Kalu. Compliments of the season. I just wanted to ask, does it make financial sense for let's say civil servants to build up their space was on? I did a quick look up and I discovered the Naira has lost at an average of just to save pension fund, just to save up on that. I don't know if you get my points.
I completely do. You're basically saying, hey, why am I putting money? Look at it this way. First of all, because the law is statutory to 18%. If you don't do your 8%, you've already lost 10% income. So first of all, everybody here No argument. Make sure you do your own 8% for your retirement savings account. Why? Because then the company can give you 10%. Whether you lose it or don't lose it, you're going to get at least 10%. Let's now go back to the contributions to your question, Josie. Just remember that those funds are invested. We don't take the cash and bury it. We take those funds and we invest it. In the last 10 years, the Nigerian stock market has delivered the largest return in the world for 2 years out of the last 10 years. I believe it was 2022. Folks can check for me. Nigerian stock market was the best performing stock market in the entire world. Folks can do a quick fact check. So the market is not a bad market to invest in, Nigerian stock market. If you invest in that stock market, you're buying Dangote, you are buying Nigerian banks, a few solid companies there, Seplat. It's very diversified. So it's better. Like I said in the example, your 18% is statutory. Do it to get your 10%. Do it. If you do ABCs, additional voluntary contributions, and you take the money out after 5 years, if the market crashes, pull the money out after 5 years. It's yours, tax-free. That's the point I'm making again with that. The ABCs, 50% of your ABCs can returns, but that you can get 50% tax-free. Where else can you get?
Thanks very much.
Fantastic, Josie. Let's get Jibola.
For the session, just a contribution, right? Raising some of the points in the NCA, and at least for small businesses and people that, so you need to still consider reaching out to an you get a deduction. What I'm saying is that to get that deduction, there are administrative procedure to be owner occupied, right? So LRS will tell you that you need to be staying in that property that you say is yours, so that you can owner occupied. Sometimes, so that's why I said it's peculiar. Sometimes if the loan is to, times hold on.
No, I don't want you. I want you to go straight to the question.
I'm not saying you're wrong. What I believe is what you said, that the interest on the property, you should get a deduction for it, which is fine. But you need to also be careful. You need to check what are the issues with your own state, right? Because it's not income tax state, same as interest or mortgage, which is
but
sorry.
Jibola, hold on. The personal income tax is payee. The deduction is above the line. So they are saying if they do a memo, if you are giving your mother in the village a gift, say gift for mama's birthday, memo, write it and send it, because you forget your budget. So Jibola, very, very good point to remind us that we have to document, we have to file. Like I said, talk to a tax professional. I'm only human. I don't want to make sure that whatever I've said is you agree with the tax professional before you go ahead and Jibola, appreciate that very, very well. Yeah. BD, I've got BD, Ben Kubicel.
Yeah, thank you so much. I believe we'll be able to watch the video on YouTube again,
sure.
Because most of us here couldn't really see. Help us walk us on how we could personally receiving salaries from companies.
Yeah.
I think that's quite important. I work for a company and I do side hustles. How do I reconcile that money? Get side hustle plus the normal pay that organizations pay for on your behalf. That's one question.
No, hold up. So what Jibola was trying to emphasize, you file income tax. It's only federal company income tax, income, side hustle, or salary. Any income is taxable, any and all. If you do Bitcoin, you get airdrops, it's taxable. If your boyfriend gives you money, it's taxable. If it doesn't say it's a gift, it's taxable. Any income that comes into your accounts is looked at as income. However, from that income, if you get your salary, your company might say, okay, hey, we paid you money, we're going to file for you for the income we're paying you. It's left to you to then go and file your own personal assessment to show I bought life insurance, I did NHF, I did investments. You have to go do that yourself with your state tax authority to claim those deductions, so that you don't have a tax payment.
Okay, so you sorry, if I'm clear, you're going to do that independent of what your organization is doing.
That is correct. Remember that in the past, the way Nigerians pay tax is that you got a 20% tax. What's the word now? When you got your income, the government says 20% is a tax-free income, automatic. So what has happened in the past is that because your company is paying you your salary, they simply take 20% automatic, apply as your tax break, and you get a tax-free. They just file for you because it's from 20% of your consolidated revenue, which your company is paying on your behalf. So that was what happened in the past. Now, there is no more automatic 20%. Nothing is automatic. Even the 800,000 naira is not automatic. You have to file to say you earn 700,000. Then you don't pay tax. If you earn 700,000 and you don't file, you will pay tax, because taxman will say, I'm not getting a tax return from you. I'm going to assume you earn 1 million and I'll tax you. It's in the law. They can assume income and they can tax you. I think it's section 91. So you've got to make sure you file every year those taxes. Yeah? File taxes yearly. If you want to file monthly, that's going to be too much for you. So what you can do is to have an account, open an account, call that account tax account. Every month, calculate your tax, pay to your tax account. End of the year, cut a check to your tax authorities, and you have your schedules. You have scanners. All your receipts for that month, scan them, attach to your report, scan it and keep it. 2025 March, you keep it. End of the year, you cut one check to your team to do it. So you can accrue monthly and pay once to them yearly, sir.
All right, I imagine how messy it would be.
It's not messy. It's not messy. It's very.
No. What I mean by that is that a lot of people are not savvy.
Well, you have to be. You have to be.
I know. I think it's gonna be messy in the first year because a lot of this is new for a lot of people. But that's fine. So I just want to clear one.
Real quick, sir. You have 4 questions. Real quick. Maybe you want to speak. Real quick. Last question.
Taking your active income to become a lot more passive. So if you receive money and you move it to mutual fund, what you clearly stated was the returns you get from that would not be tax except for the withholding tax, right?
It's no longer taxable income. There's no withholding tax. It's just no tax. If you put your interest you are getting, that 100K is tax exempt. It's no say WINOSC. No say no. Let's get Kosi, KOSI. Kosi, how you doing?
Okay, Andrew. I have a question.
Yes, sir.
Let's say you live abroad, you don't earn money from Nigeria, but you have landed properties in Nigeria that keep growing in value.
Yes, sir.
Do you pay taxes for having properties in Nigeria, although that you are not making money from them, but they keep appreciating in value?
No, sir, you don't, because we don't tax assets, we tax income. So if the land value just keeps on going up, it's just the asset that is going up. There's no income earned from that land. So you won't pay any tax on an asset, sir. You only pay tax if you have if maybe a farmer comes to that land and is paying you rent, then you are making income from the land. But if you are not a Nigerian, i.e. you are a Nigerian born, but you're an American passport holder, and you do not stay in Nigeria for 183 days, then for tax purposes, you're not a Nigerian tax payer. So just to give you the full answer, sir.
All right, thank you.
Fantastic, you're welcome. Let's go Okaifo. YouTube. Yeah, go ahead.
Yeah, I want us to thoroughly define what we mean by income. Grants, scholarship, gift from family and friends, can all these things be called
income? They stated what income was. They didn't define it. So salary, Bitcoin, interest, dividends, bonus, those are all income.
Gifting from family and friends.
Yeah, so gift is a very, very funny thing, right? I would say this: if your father gives you 10 million naira as a gift, you're fine. That can be a gift. You can have perpetual gifts in eternity and call it a gift. What is a gift? One time, huge. It can be 2 times. It's a gift. If I'm paying my girlfriend salary and I call it a gift, they'll say it's not gift, it's income to her. So I'm giving her every month, I can't be giving her a gift every month.
And
It's taxable, yes. Just to be clear on that. All right. Thank you so much, Akai.
Good evening.
How are you doing?
Yeah, I'm fine. Thank you. I want to know how about maybe crypto guys now, for example, we are doing Web3, airdrops, and all. Because when we want to convert our USDT to Naira, you get after paying tax on Binance or on Bybit and other P2P platforms, then we would have to come and start paying personal income tax again.
So let's just be clear.
So I really want to I want you to explain,
Big George,
like converting your crypto to our exchanges now. Yes.
See, whatever. Don't use technical words and confuse the tax man. It's a very, very simple thing, right? The activity you are doing, are you earning income from it? That's have 10 Bitcoin, right? What if you sell one?
Yes.
If you sell one income, what if you get airdrop? Is it income? Yes, because that is an asset that you are going to sell tomorrow. So it's an asset. You've got income. Yes, you pay income. Remember, you pay income when you sell. If you receive it, I've covered all those loopholes, really. Yeah. Makes sense? Makes sense, sir? Big George, are we?
Okay.
We know WINOSC at Guy Badin. We know. So are you ready to speak now? All right, fantastic. Let's get YMD Esquire. YM, thank you so much for asking.
Okay, I have a few questions for clarification purposes. So you spoke about like some ways you can get a cutoff as like a limit to your income. So if you get like $1 million naira, you could put 200,000 naira as bracket. So I want to ask, if you get that 1 million naira and you use 200,000 to pay to buy into a mutual fund, do you still have to pay for the 1 million naira tax bracket or 800,000?
That's a good question. So let me just explain again, right? 800,000 is not taxable income. Your first 805 with 800K for the whole year, and you take your 1 million and you go buy a mutual fund. You've taken that income, put in the mutual fund, right? So the income you make from that mutual fund is not taxable. The 800K is tax extra. You paid income tax on that fund. The money you get from the mutual fund is tax-free. So the first year you get the money, right? Anything above 800K, you pay tax. But if you take that 1 million and you buy a mutual fund, the next year when they pay you the income is tax exempt. Does that make sense what I'm saying?
Yes.
Yeah. So a mutual fund is not above the line. It just means the revenue you are getting back is not taxable, but you will pay tax on that income you are using to buy the mutual fund. Hope that makes sense.
Yes.
Fantastic.
Also, I wanted to ask, for this international investments, those dollar fund count as an international investment? Like if you invest in Stanbic dollar fund?
I don't think it counts for international, but it counts for registered SEC collective investment scheme. So because it's Nigerian, it won't count for international, but it will count under the SEC registered scheme. Does that make sense?
Yeah, that makes sense. Finally, sorry, for this export-based businesses, if you maybe you want to go into processing because everything you're making is for export.
Great question. I think when you import for agriculture, it's tax exempt as well. I believe so. I could be wrong, but I think when you import tractors, you don't pay. Remember, if you do agriculture, importing a corn machine, in the first 5 years,
That makes sense.
All
right.
Fantastic.
Thank you very much.
Appreciate. Thanks for calling me. Yeah. Okay, Iyang. Let's go, Iyang. Iyang P. Iyang Patrick. Hey, Iyang, how you doing?
Good evening. I'm fine. Sometimes you have money in Binance, and when you withdraw, you are withdrawing at a negative. Tax you for that. Now, in other places, I know what happens to it. So if you trade, for example, I trade with 1K. Once I'm withdrawing, the tax guy already knows Yes, from there. So that's I know of Coinbase.
All of them
So
do
when
it.
we withdraw,
All of them. So there was what they call tax loss harvesting. All firms in the US do it. So if you sell at a loss,
yes,
you don't pay. You can use those losses to write off your taxes.
yes,
But
yes.
I think in Nigeria's case, it is restricted. You can only use passive income to write off passive income. So then you make Bitcoin loss. You can't use that passive income to write off active income. I believe you also use that loss. I could have to be sure of this, but I think that's what the law is saying. You can't use it in your total tax to reduce your total taxes. You can only use passive income. Yeah,
Okay.
for Nigeria.
The second thing I want to ask, you mentioned something of 183 days or 186 days outside Nigeria.
Yeah, 183.
Okay, you're not going to. Okay, you're not going to. Be taxed. So if, for example, I have money in Nigeria,
that's not what I said. So what I'm saying is that so who is a Nigerian son that spent 183 days in Nigeria minimum, or has a permanent home in Nigeria, or has a significant economic presence in Nigeria, or if you don't live in Nigeria at all, but you're not going to be taxed.
Okay, so how do one go? I just need to know how to avoid this because
I can't tell you.
For example,
if you're in Nigeria for one of those days, then count the days. That's what I just said. Count the days.
Of course, okay. For me, I'm not in Nigeria for those days. So, but I know I get money from Nigeria that hits my account, right? So will I be taxed since I don't stay there?
No, because you're not a Nigerian. So if your business in Nigeria is making taxes, the business will pay company income tax. But you as an individual is not paying personal income tax because you are not resident in Nigeria.
Okay.
That's resident does not mean company residency. You have 4 flats in Nigeria, right? Those 4 flats are owned by Patrick Company. Patrick Nigerian, according to how they define in Nigeria. You've not spent 100 days in Nigeria. You'd have a permanent home in Nigeria. Remember, you might have a home, but not your permanent home. That's what they're trying to say. Yeah.
Okay. Thank you so much.
You're welcome, man. Hey, I sell land. G Summit.
Indebted to you. So that is the first.
When the person owed you and did not pay, you can write off that bad debt as an expense and reduce your taxes. So let's say you lend money to somebody, then the person now became born again and came back and paid you that what he was owing you. That's income to you, fresh income to you, which you don't have to pay tax on. All right, so ask your second question.
All right, so the second question has to do with the mode of earning. For example, a senior for who resident in Nigeria, but the income doesn't hit a Nigerian account first.
Yeah, they've won. Those are the people we are targeting. If you work in Nigeria, you work in Delta State, you work for Amazon bank account, interest, rent, royalty. They didn't say salary, dividend, interest, rent, royalty. From that money you're bringing to Nigeria is tax exempt. That's what Nigeria is saying. So that means that because they didn't say salary, I won't imply salary. But I think I'm sure if you bring your salary, they might not. I don't want to say what is not in the act, but they are basically saying dividend, interest, rent, and royalty.
Oh, all right, that's interesting. I got an idea from
Marzi FX. Marzi FX. You guys have nice names, sir.
That's so painful that I do. I am a forex trader, and I'm thinking it's so unfair that when I make losses, I bear the losses. Then the moment I recover my losses, then you tax me. It's not making sense to me.
Trading broke. You have a trading. If you make a lot, that's your profit, isn't it, for the whole year?
Oh, okay. Now it makes sense. Makes sense. Thank you.
Emmanuel.
All right. So I wanted to ask them, what effect will it not say would it be better for us to transact money through blockchain Like instead of transacting on crypto, instead of transacting on our bank, I can move our major money, then transact on blockchain. If we transact on EVM blockchain, we still be pay tax. We still be tax on it.
Can you buy Mama Put with blockchain?
It's hard.
Yeah, so why are you asking the question? You can't buy Mama Put with blockchain. So whether it's on blockchain, you have to pay rent with Naira. Your landlord don't hear on blockchain. That's done and taxes. I actually don't know. If anything, reducing your taxes allow you to spend more, which we have to go into. But at least I've answered your other question, Bonafide, right? All right, fantastic.
Yes.
All right, let's get Chiamaka. Thanks, Bonafide. I appreciate you. Chiamaka, how you doing?
And that's the commission from doing an extra work.
Yeah,
will it still be taxed?
Yes. Yes, it will be taxed. If your company gives you a car to use to do trade, it will be taxed. If your company gives you a house to live in while you're doing trade, it will be taxed. If your company gives you let me write down, no vex. Yeah, let's get Biodu ayorin.eth. Biodu, hi, what's up?
I have an asset on exchange. So I use assets to take a loan on exchange. Now withdraw this liquidity back to my Nigerian account. Am I going to be taxed? Because I still have a loan to pay back. Though I use an asset on the exchange or maybe on DeFi or whatever. I'm talking of crypto now to take a loan. So am I going to be taxed on the money, the liquidity being withdrawn, exchange back,
something called did you take a loan? Did you pay interest? Okay, file it here. But for an individual, nothing like that there. So even if you are correct that what shows up is your interest, you see what I'm saying. So my advice is if you are doing that as a thing, set up a company and then do it under the company, because then when you take on the loan you've taken from a loan.
Okay, my last question is that for this new year now, the 2026 we are going into, so it means that by March 2026, we are meant to reconcile all taxes that happen January 2025 to December 2025. Or they are looking that way like, okay, this is a new tax regime or whatever, and we are starting it afresh.
Yeah, so by 2020,
everything that happened till December 2025, they are not looking into that apparently. So they are starting.
Warrior.
Speaking.
Rivers, hold up. Warrior, go ahead, Warrior. Yeah.
Okay, thank you. So I just wanted to clarify this passive income strategy. Some of my clients are overseas and some are in Nigeria. So the clients that I teach overseas, is that considered as an export and is that therefore exempt?
Yeah, it says, let me read what it says so we can learn together. It says dividend received. They are paying you, let me debit my GT account and give you money. I wouldn't take it. I would rather pay. So they can't pay you from abroad into your Nigeria. You know how the Nigerians will do, I'll pay you Nigeria. Yes. You have to be clear about, If you got
those
money.
Clients.
Yes, if you got money from a client, because it says in respect to and repatriate through official channel. That's what it says. So if they buy your training program from Canada and they pay you by sending money they wire you money to Nigeria, that's an official, then that forms that dividend receipt. But you're saying dividend receipt from investment
it says all profits.
So
profits.
So company
from
not
overseas.
What was the guy that was speaking? Usman, how you doing? Usman Lawal, thanks for hopping in here.
Thank you. Make a clarification on this. Actually, I'm through AdSense. I'm a YouTuber, so I am through AdSense, and I don't know. I just
through official channel, then it's fine. You don't pay tax. That's what they're saying. So make sure through official channel. That's fine. That's what I'm reading what the law is saying. Yeah.
My question, because that's what's
all right. What's up?
Can you hear me?
I can hear you, sir.
Okay, my question is, because over the days, I will have seen people posting different type of information regarding the taxes.
I want to say I do this. If you are engaged in any the expenses that you have used to generate that name, because you cannot deduct expenses under your personal name. There are not those. It's advisable you have a company. You can also claim those expenses. So even enterprises, you can still use that, but it's also going to be on the personal side. So look at it this way. If you want the expenses, you've got to register the company. If you say you are fine, I don't need the expense cloud back, then operate as your personal. They are both legal. It's not illegal to do it. It's just that you won't get those expenses.
That's why I'm a little bit confused then.
Yeah, but if you're a lawyer and the rest, lawyers and professional people don't have the same. If you're a lawyer, you can't claim those things that we claim. You can't go and claim pension for as a law firm. They have their own specific thing that they.
I'm fine. Good evening, everyone. Thank you for organizing this this space. Okay, I have a business account. So I have just registered my business, and I've also opened a business account. Because when I had all of the tax stuff, so I just decided to, try to align myself with it. But then I also have personal accounts with different banks. What I'm asking is, if I get money, if I do my business with my business account, I'll be able to file for tax exemptions and all of that, all the exemptions that go with companies. But then, what happens if I earn through other means? Maybe I have other streams of income and I earn through other means, and those money come to my personal account. Will I be taxed from other means of income, income that comes to my personal account apart from the business account? Since a business owner is taxed from the dividend he gets from his company, how are we going to strike a balance on that?
So that rent up to 500,000, 20% of your rent, pay tax on income that comes to an account. We don't tax transfers to your account. If you receive income to your bank account, it doesn't mean it's going to be taxed. It simply means it is income. That income, it just means it's a transfer. The problem is that the taxman sees that transfer. I will now ask itself, how can you get transfer of ₦1 million, but you say you're only making tax of 100 naira? So it makes them to ask questions. It doesn't mean every transfer is business. Your company pays you a salary. You pay income, which is business income. When my company pays me, the owner, a salary, my company will deduct my.
If I come in to loan an individual money.
Yes.
Okay. If that is possible, you earlier said that if the loan is not paid back, that could be written as a bad debt, right?
Yes.
So if I run a company and I loan myself money, okay, if I'm the receiver of the loan,
you cannot buy your own house at 1 naira and say, oh, the house is worth 1 naira, I won't pay tax on the one transaction. If you sell the house to your son, to them. So be very careful about trying to do these transactions. You can't. They're not. Start from the top.
Okay, so I regularly buy properties in Nigeria, but I send the money because it's my father that normally makes the purchase. So I'm asking, would they tax me?
So you have a company, and then you have a third party giving you money to buy the property.
No, that's not a scenario. Okay, so now I'm saying, assuming you live abroad, okay, and you want to buy a property in Nigeria. Let's just assume you don't have Nigeria account. You just want to make that purchase through someone's account. In this case, your father's account. If you say you send like 30 million naira into your father's account, and then your father buys that property in your name, okay? So at the end of the tax year, will the bank or the taxman see the cash inflow into your father's account as a taxable income?
No, but it's not. Yeah, I hear you. It's not income, right? It's just a transfer. It's not income. So the money came in to buy something. It's not income. Your father didn't make any income from it. It was used to buy property. So when your father is filing taxes, your father is going to say, I made income of 10 naira. The taxman will say, wait, we saw 30 million come to your account. They'll say, okay, Oga, come and explain this. He'll say, no, that money was for someone to buy property. It's not, I don't recommend it. That's why I'm saying have your own transaction account, but you won't pay tax on it because you can explain what it's for. When you file tax, you say, I got tax of 10 naira. Okay, but when they print because in America, again, as long as your father files income with the correct narration, if the money is not for him, because the title of the property is not his, right? The title is not his. Then why would he pay tax on that? But I don't encourage you to do that. Have an owner, then of course they would impute it to you. Yeah.
Thank you.
Somebody, so just what does it say for business? Jeez. Turnover. It says turnover. They didn't mention income. They said turnover. But they said turnover, not income. Turnover. What about remote workers? Can they claim to export their services and pay the tax? So we're assuming that you'd have to take that income you earn abroad and then convert it to passive income. And when that passive income, then Ola Nigeria says income on exports are tax exempt. But is exporting talent inclusive? Yes, if you export interest rent, that's it, full stop.
Yes, that's my understanding.
All right. Obina, don't go anywhere. I'm sure many people will ask. Just stay right there. Don't go anywhere. Many people will have questions for you. Michael. Hi, Michael Kingsley. How you doing?
Good evening, Kalu. Thank you so much for this platform. I've been enjoying it. Thank you.
You're welcome, sir.
And I'm doing it for the first time.
Oh, nice.
So I have two questions very quickly. The first one, I listened to your the explanation on exports.
Yes, sir.
So exporting products and services. So in my case, I run an IT firm, and I think all my clients, I don't really have clients in Nigeria. So I'm a web developer and I render out those services. Now, I receive payments here, but I have a corporate account that I use to receive payments. So what I want to know is when they pay me from there, because they pay directly into the corporate Naira accounts, they use either LEMFI or World Remit and stuff. So they use it to make the transfer directly to the corporate account. So what I'm asking is, am I going to be taxed on this, or I need to go and open a domiciliary account? I don't know if you get what I'm saying.
Perfectly, because the lady had asked this question before. She was saying she sells goods abroad, and so I was saying that they will not tax you based on what I'm reading. It's saying non-oil exports, goods and services exported from Nigeria and repatriated through official channels. That means that the channel has got to be official. So if LEMFI is official, you are fine. What you need to do is to go and clarify that the LEMFI is an official channel. Because, the point again is that if they pay you locally, that's where I think you're going to run afoul. If they say, oh, we have a Naira account, and we're going to pay you Naira account to your Naira account, that's where I think you might run afoul. The government wants remittances. That's what I give me this tax break. So if they're just paying you from Nigeria, it's not a remittance from abroad. There's no dollar moving. So that's why I think they would not give you that tax break. So I would say, number one, clarify that the LEMFI or whoever you're using is a approved channel. And then number two, make sure that it's not coming locally. They can't pay you. They can pay you Naira from there. So they will send you to their bank, and the bank will pay you, but they can't pay you from somebody in Nigeria will give you Nigeria. No, it's not a remittance. Yeah, that's what I would say, sir. Yes, sir.
Okay, that's well understood. Thank you.
Fantastic. Yeah.
So the second question is about my farm. I have a farm, and I just registered it this year, and I also have a corporate account on it. But I think I heard that I was at the FIRS office, and they said as long as I'm not going into branding, that if I process and brand, then I'll pay tax. But if I'm not branding and I'm just processing raw and selling like that, I won't be taxed. So I'm now trying to ask, if I use the please, I'm just asking this question just for clarification, so I'm not trying to do tax evasion. So if I use the agricultural account, mostly for transactions in order to avoid tax, is that illegal or is it allowed? I just want to.
So first of all, Michael, there's nothing like an agricultural account, right? They don't care what you target. I think what they care is it receiving inflow? Remember, inflow is not income. Inflow just allows them to see what kind of transactions you are doing. So look at how the FIS, Obina is here. FIS will say, wow, you have an account that's receiving ₦1 million every month. Okay, you can't come tomorrow and say that the total tax from that account will be like 1K. They want to know more. It doesn't mean because you get $1 million, you pay tax on $1 million, but they want to know more because 1 million to 1K is very, very wide margin. So they don't care whether I call it agric or non-agric. It's an inflow, right? It gives them an insight into what you're doing. Very wide margin. So they don't care whether I call it agric or non-agric. It's an inflow, right? It gives them an insight into what you're doing. Let's now go to the agric sector. If it's a brand new farm, 5 years, no tax, end of story. If it's a farm that is now in existence, even if you brand it, you can expense away the expense on that farm. You can expense it away, even if it's branded. I think what they are talking about is VAT. Obina can correct me, VAT, because VAT on raw agric is tax exempt. So if I have corn, I don't pay VAT on corn. But if I have corn and I put it in maybe I take that corn, make it into corn, and I put it in maybe I take that corn, make it into corn in cans in supermarket. Supermarket will charge me VAT on that corn I've packaged and labeled. I think that's what they are going to. But as a rule, Obina, so that's where they are going to. It's not really if you brand, if you make profit, expense the profit off. If you buy generator, expense it off. If you brand your corn as Michael corn, that's fine, expenses off. But if you take the raw corn, VAT is exempt. But that raw corn, you now go and package it, put it in can, put one nice picture there. Then yeah, exactly. That's what I think. Okay, I don't. Yeah, go ahead.
I would also add, it doesn't matter what you do with your agricultural account. You can receive any transaction. As of the time I left, we have access. You can request access into any company through that account. And to who? Just that the taxpayer is not really interested in.
I'm laughing my evil laugh because I'm just telling people this, right? Mr. Taiwo was the person that was defending the private sector, i.e., private sector he hasn't seen before. So I prefer you. That's why I'm doing this space. I want you to have the legal ways to avoid tax. There are so many things online that are just nonsense. Oh, I'm going to open. No, they're going to find you out, and they're going to basically. So this is better for you. Understand where the law works, and try to work with it. So YouTube guys, I'm so sorry. We have a storm. I think it's affecting the quality of the internet. What I'm going to try to do, I'm going to try to re-record this whole presentation and put it again on YouTube. I think it's breaking off. It's because of the storm. I'm strong, but the thing I'm getting the errors on it. So try to correct. Sorry about that. So good. Let's get K Byte. Michael, thanks so much. You're welcome.
My last question.
So profits are also covered. It doesn't have to be a salary. That means, you have to do a company, and that company you bill them. Then when they send them into your DOM account, it's profit to you. Then you are covered. That's what I would say, sir.
Okay, yes, because I usually send that invoice and they pay directly to my DOM account.
Yeah, try to do a company so that it's profit. So just so that you are in line with the act, because it's saying profit of a non-Nigerian company, not individual. You see, the language is saying profits of a non-oil Nigerian company in respect of goods and services exported from Nigeria and repatriated. So you have to be a company, not an individual.
Okay.
Sure, you see
Okay, then
then this should be a two-part in that case. So in that case, if I have my company registered and they paid to the company's domiciliary account, if I now move money for my personal upkeep or stuff,
that's
would
fine.
that now be...
No, that's fine. So look at it this way, right? The money that has come into you is already is tax exempt. It's good. You can do whatever you want with it. You're fine. You follow?
Thank you very much.
Yeah, but it has to be a company, not individual. Company.
Okay, but if it's an individual, will that be taxed?
Yes, that's what he's saying here. So I'm trying to follow the language explicitly on the law. The law is saying the profits of a non-oil Nigerian company. So go and open up a company, brother. Simple. Go and open up a company. Right? K-Bait, go and open up a company. Yeah, you're welcome. Montero, how you doing? K-Bait, thanks so much. Montero, what's up?
Hello. Good evening. I'm fine. How are you?
Very well, sir.
So the thing is, I want to ask a question based on this VAT.
Yeah.
So I want to know if my company, because what my company does is I do recycling, plastic recycling.
Okay.
So I want to know if I'm paying VAT.
Yes,
to the people that I'm buying the waste plastic from and the people that are will I be charging VAT to people that are buying the processed plastic from me?
So what they are saying now, sir, is that if you pay the VAT to the people you are buying plastic from, you can write back that VAT to your account. So that input VAT is deductible. That's what they are saying now. So if you pay input VAT, you can deduct it, sir. That's what they're saying.
Okay, so can I decide not to pay the VAT?
No, if they ask you to pay, but then have your records and write it back to your income.
No, okay, what I'm asking is a majority of people I'm doing business with doesn't do any VAT stuff.
Yeah, so you don't pay them.
Is it a must that I will be charging both my customers VAT or
let me give you a word of caution, right? There's somewhere in the act that says that you cannot charge as a deductible if that expense did not pay import duty or VAT. What I would advise you as a business, VAT is the law. If VAT is supposed to be collected, I would say charge people. If the folks that are giving you input not charge you VAT, okay, they didn't charge you VAT. What can you do about it? But for you, keep your VAT records on time. That's what the law is saying.
Okay.
Yeah, just yeah. Montero, real quick.
I want to ask a question, sorry. Because so now if I'm paying myself, I want to know the better option because this I thought I don't know much about all these taxes. It's just because it's this year that I'm putting interest on it. So I heard that there is company income tax and personal income tax. So if I'm paying myself a salary for my company, will I be paying tax on that salary and also be paying tax on my company's profit?
No. Let me just try to explain again, Montero, just real quick for you, right? If your company makes 1 million naira, your company has made 1 million naira, your company is going to pay tax. Stay with me. Let me mute you. You have lots of background. If your company receives 1 million naira, your company is going to pay tax on 1 million naira. Fine. Now, let's say your company pays you a salary of 900,000 naira. What will happen? Your company will write off that 900,000 naira as an expense to the company. So your company will only pay tax on 100,000 naira. You that received income of 900,000, you will now pay personal income tax on that 900,000. Does that make, do you understand what I just explained, sir? Montero, is it clear?
Yes, I understand it now.
All right, perfect. Excellent. All right, let's go to Naza. Naza, go ahead.
Good evening. Thank you so much for this opportunity. And the music is being produced in Nigeria. I come back home to get paid royalties, and these royalties go back into my dorm account. in Nigeria, do I get taxed for it? Secondly, if I am reported, I earned it's worldwide. My royalties, my mechanical,
what about Nigeria now? Not worldwide. So do you earn any income from Nigeria?
But these funds, I repatriate them basically back to my DOM account in Nigeria.
Okay.
Do I get taxed for it?
No, it's a transfer. It's not income.
Okay. Then, secondly, I also work here, and at the same time,
you're moving away very quickly. What's the money doing in your DOM account?
It's the savings.
So who spends it?
Sometimes I send it to family or as I wish.
Okay.
Yeah. Then secondly, this one is my own income from my job and all that, and I send it back home for also savings. Do I get taxed on it?
No, because we said if you send money from abroad, dividends, interest, rent, royalties. This is not a business. They don't tax you. What we have not clarified is salaries part of dividend, interest, rent, and royalty. That's what we don't know. So if, for instance, you took your salary in America and you bought a certificate of deposit in America, and the city paid you an income stream, and you send that income to Nigeria, then you don't get taxed on it. But that's dividends, interest, rents, or royalties. They didn't say salary. The way they talked about profit is on if you are exporting goods and services. But in this case, you are remitting.
Yeah. Okay. Lastly, because this is also as regards sending money to, because I'm considering my parents, they are aged, and sending money to them, to their accounts directly, do they get taxed for it?
If you send less than 800,000 to them, they don't get taxed as a whole. If they are aged, retirees also do not pay tax on retirement income. So if you are sending upkeep allowance for parents, are they more than 70? How old are they?
My parents are not more than 70, but they're both retired.
So their parents should file a tax and say they got money as upkeep from their son.
Okay.
So they would file that they received that money, but they're not going to pay tax. But that money is not income to them. They have to still file it, but they received it. But 800K, they're exempt and all that. So these are gray areas that the act is not very, very clear on. Because like in the abroad, if you are a certain age, you no longer pay taxes. I don't think we have it in Nigeria. They just stopped at the income of 800K. I'm sure they would amend it as we go along. But at a certain age, they shouldn't be paying taxes. I know if they receive a pension, they don't pay tax. But if someone receives money from his son abroad, 10 million naira a month from his son abroad, does he pay tax? The tax law is not very, very clear on that. That's what I'm saying. I'm trying to just stay on the minutiae of the tax laws. It's not very, very clear.
They get taxed for it.
No, I would narrate it properly. Narrate it properly as welfare payment, income, welfare payment to my family, or medical expense to my family, because it's medical as well. Upkeep allowance, food, medical upkeep allowance to your parents, and send it to them. So let that narration be there. Yeah, that's what I'll say. Yeah.
Okay. Thank you.
All right, Nasa. Thank you so much. Shego Olani, how you doing?
Yes. Yes, hi, Carlo. Thanks so much. A couple of my questions have been answered, but let me just reiterate. I do have an LLC, and I export software services. Things that come into the corporate account is exclusively from this export. When I'm filing, and I move all of the money out as well. Just it's in and out. It's exactly 2 transactions monthly, just like that. If I'm filing, how do I file do I say that there's no profit, or how does it look like to say that this is
your accountant to file everything for you and you won't pay tax. Your accountant to file income. Income is there's income, but there's no taxable income. Because the law is saying that any profit of any non-Nigerian oil company, that's if you're not in oil, you're in non-oil sector.
It's in software services.
Good. And you export goods or services and you bring the money back through official channels. That income is not taxed. Pay tax on that income. This service to this, they paid me this, I'm not paying tax on this.
I see.
Yeah.
So
you have to file, yes. You have to file, correct. Yeah. If you don't file, then they're going to tax you on that income because you haven't told that income is not exempt. You saw that the IRS man was here, right? The guy that was here.
Thank you so much.
Yeah. All right, perfect. Yeah, sorry about this.
I have a second question.
Real quick, go ahead.
Yeah. Yeah, sorry. Then when the money comes to that corporate account, it also moves to, let's say, an investment company account. It moves for investment reasons.
Yeah.
Is there any gray areas in that dimension or not?
So you see, in America, they have what they call basis. If money has come in, it already has a basis. In Nigeria, it's now tax-free. If you take that money and invest, it should also be tax-free because taxes have already been quote unquote paid on that income. You see? So it should, when you buy assets, you shouldn't pay any tax anymore because it's coming from taxes. So what I would advise you to do is to keep proper records, to say, when I bought this tranche of investment, this money came from this income that I earned from exporting goods and services. Show them the fact I got tax-free because that income has already been taxed. Where you feel as if you don't have paperwork to justify this transaction, then they will say, no, we don't agree. This money came from your blah, blah, blah. But if you have the paper trail, fantastic. So I will create, just like you said, any transaction, just name it. So they can see where the trail is coming from. If you do investments outside this American type, then do it on a separate CSCS. You see what I'm saying? So if I sell exported goods, I use the money and I buy stocks. But I also buy stocks from my Nigerian income. I will separate both CSCS. I will just separate them just to avoid wahala. So that I'll tell the FIRS, this CSCS is for me when I do Nigerian things or my normal stuff I buy here. Remember that CIS schemes are also tax exempt. Get down completely to say ever. You only pay the tax now, or you only expose this to potential taxes if you buy it in the cement singularly. Then they might. Right.
Okay, thank you very much.
Fantastic showing you. Hi. Let's get Quay. Hey, we have to run down. Quay designer, QUE designer. We have to run down. Yeah, hey, how you doing?
So like if your parents, your pension from a deceased person gets into your account, you don't tax it.
Are non-taxable, correct?
All right, thank you.
Yep, you got you. And let's get Ikechukwu Okori. How you doing?
Yeah, good evening, sir. How are you doing, sir?
I'm doing very well. Thanks for asking.
Okay, so I have a few questions. While we are still looking at whether it will come into play or not. Now, I have, for this parents thing, now if you have, like you talked about gift, if you are giving a proper narration, so if you are doing like a monthly thing, like you said, at a particular age, they are not exempted. So if you are giving them a thing and tag it as gift, would they need to file and would that be taxed?
All income has got to be filed. Whether you earn income, you don't earn income, you have to file. You file and say, I got zero. If your son gives you money, you file and say, I got a gift from my son. You're not going to pay tax. Filing doesn't mean you pay tax. But filing means that you are reporting yourself that this and I got this income. I'm letting you know it's not taxable. So they have to still file. Yeah, they won't pay tax, but they have to file.
Okay, sir. So for another, now you work for a firm or you work with a company, and now you have a car loan, which they deduct part of your salary before, remitting or paying you what they, in quote, have to pay you. Now, this is between you and the company. How should the face of this be now in terms of the tax? And as well, if you have, let's say, an LLC where you are using that your loaned car or the car that is on loan to work, can you make deductions of the expenses you do on that car too?
As a business or as an individual?
As a business.
Yes, you can.
Now, in the face of the company now, that is where you work with, and the car loan is to be deducted before your payment. But let's say, for instance, your total pay is $250, and you pay monthly car loan of $50,000, and your take home now becomes $200. So it's your tax now. Would it be calculated on the $250 or on the 200?
On the 250.
So for a car loan, there's no reprieve.
It doesn't matter what you call it. The only loan that they are giving you reprieve on is a mortgage loan. That's for the individual. The only reprieve you get on the individual, right? That's also taxable to you as income to you. So the only thing there is going to be mortgage. If you are paying interest on a mortgage, you can claim that. Every other loan is not claimable.
But now when you use that car now to work for a company,
But I asked you individual or company. You said company, but the car is
for the company. You can write off that.
But the car is owned. But your question, the company will write it off as a cost of doing business. If the company goes and gets car hire and is paying lease or whatever payment, the company can write off that lease payment as cost of doing business. The company can, the individual cannot.
Sir, but what in a case where you own that company, do you own the car, or you are using it to do the company's
So you are
business?
asking the question to get a different answer. The company can, the individual cannot. All right, the company can. There are two different people. They are trying to ask the question. Maybe no. If you own a car and you are paying interest as an individual, you can't write it off. The company can own a car and write it off, i.e., the interest payment, the mortgage, or the company can, but not the individual. It's pretty clear.
No, sir. I'm now saying it's not the company now that owns this car. Let's say this company is a different entity.
Ikechukwu.
But you, the owner,
Ikechukwu
owns a vehicle, yes?
The individual cannot write off any loan apart from mortgage interest. It's a simple full stop. Any other...
No, I get you, sir. When I'm just probably get what I'm trying to say, sir. I'm saying now, this company he doesn't own this car, but this individual owns. So if the person uses this car now to do a business for this company, he's not writing it off. Can the company write off that expense that is incurred on that car?
How can a company write off an expense owned by a personal by a person? What's the connection? You're trying to ask a question to get an answer that you like. What is the connection between the company and the personal owned car? What's the connection? None. So if the company owns the car, yes. If the individual owns the car, no. You can't change the answer by asking. I hear you. You're not going to get a different answer. I didn't write the tax law. So let's move on. Are you good?
Yeah, thank you.
Sorry about that, sir. Professor Incredible. How you doing, sir? Professor Incredible.
Good evening, Ikechukwu. So I said Ikechukwu, sorry, good evening, Carlo.
How you doing, sir?
Ikechukwu, well, I'm good. How are you too, please?
Okay.
If Ikechukwu wants to get his expense, he should charge his company. If he's doing a company job,
simple.
He should charge them. They should pay him.
Simple.
Yeah. So I heard you speak about repatriation then into your individual account.
Yes.
You are not paying tax.
Yes.
But when you invest, I'm investing in a company like Dangote. I needed clarity. You're paying tax on that?
No, so let's be very, very clear. If you are an individual and you are repatriating money that comes from dividend, interest, rent, or royalty, then you don't pay tax on that. They did not mention salary. So if you work for Facebook in America, the salary from Facebook, they didn't mention it. They are saying if you take your salary from Facebook and you buy US Treasury bills, and US Treasury bills pay you an interest, that interest, if you bring it to Nigeria, you don't pay tax on it. But for a business, if it exports and gets income and it comes through official channels, it also does not pay tax on it. So two differentiations: individual, dividend, rent, royalties, and interest. For company, it can be anything as long as it comes through your approved channels. Yeah.
Okay. Now, again, just for clarity, because now it's clashing with something I had read somewhere. So, as an individual working abroad, earning salary and you are being taxed abroad. You're taxed abroad on that salary. So you're saying if I repatriate that salary to Nigeria can, when probably these two countries already have tax treaty, you cannot do double taxation.
You're asking two different questions. You asked me the first question, you mentioned double taxation. If you have a double taxation treaty, then the treaty would suffice, not the tax law, right? Okay. That's a difference. If your country has an agreement with France that says if you work in France, you don't pay tax, then you won't pay tax, and that end of story. But the law is saying dividend, interest, rent, and royalty. It didn't mention salary. I suspect salary is included, but it didn't mention, so I don't want to say it mentioned.
Okay, I get you. So that scenario I painted now. Now, double taxation treaty, blah blah blah. If I repatriate that money and I invest in a Dangote,
just pause. When you repatriate the money, then you've already paid tax on it. So it's fine. You've already paid tax on it. You're not going to avoid the tax. Double taxation just simply means that if you pay tax in Canada, you've paid tax in Nigeria. That's all it is. So you've already paid the tax. So there's no problem with that.
Thank you. So
what they are saying, if you bring in interest income from America, it is tax-free. That's what they are saying. But if double taxation means that you've already paid tax abroad. All right. So go ahead, sir.
Yeah, thank you. So final question. So I, as an individual that don't live in Nigeria, but repatriate money to my accounts for savings or whatever, or for family upkeep, do I have to file?
No, there will be a Nigerian. First of all your income, if you are a Nigerian resident, not citizen, resident, any income you make worldwide is taxable. I repeat, if you are a Nigerian resident, any income you make worldwide is taxable. Let me give an example. Joshua just fought on Saturday, right? Anthony Joshua just fought on Saturday. Anthony Joshua is a Nigerian and a UK person. Let's say he's a Nigerian. Does he spend 183 days in Nigeria? No. So the money he earned in Saudi Arabia will not be taxed in Nigeria. But let's say Anthony Joshua spent 200 days in Nigeria in 2026. If he goes to fight in Saudi Arabia, the income he makes in Saudi, the $40 million he paid in Saudi, he will pay tax on that income to Nigeria because he has spent 200 days in Nigeria. Or let's say Anthony Joshua does not spend a day in Nigeria, but maintains his permanent home in Nigeria, he will pay tax in Nigeria. Let's say he doesn't spend 200 days in Nigeria, does not have a home in Nigeria, but has huge investment in Nigeria, has a huge family here in Nigeria, he also pay tax in Nigeria. Let's say Anthony Joshua earns money in Saudi Arabia, and that income will not be taxed in the UK. Nigeria will tax him. So the residency is clearly defined. If you are a resident, they don't care about your citizenship. They care about your residency. If you live in Nigeria for more than 183 days, that makes you a resident. And if you're a resident, you then pay personal income tax to the Nigerian tax authority. Make sense, sir?
Yeah, very clear. But I just need to be clear. So as the non-resident, but a citizen, living abroad, living with a country where there's a double taxation treaty, you only repatriate money home, and the end of the year you don't have to file because you are not supposed to pay tax, right?
Correct. You will not file because you're not supposed to pay tax. Whoever you're giving the money to, if you're giving it to an individual, that individual has to file. If you are buying shares, that company will do withholding tax receipt on that your investment. Yes, but you that's doing the remittance, you should be fine. If you qualify, if those other qualifications happen,
Yeah, thank you very much.
You're welcome, man. Yeah, let's get Awala. Hey, we got to go, guys. Awala Ruben. Thanks.
Yes, I want to ask is concerning most of us that used to buy stocks, margin loan. So I want to know if we are supposed to pay tax on the profits.
Yes, no. If it's profit, you pay tax on the profit now. That's a simple one now. Or are you trying to ask that because you made the profit to the loan, you shouldn't pay tax?
Exactly.
No, you pay net. You pay profit on net income only if you're a company. If you are buying shares in your personal name, and it is voila.
Yeah, fine, sir. Good evening, everyone. My question for sake of clarification, because I'm into tax a little bit because I'm a student of ICANN. I did tax since about 4 years or 5 years ago. So the new tax law, I'm not that familiar with it, so I've not written any paper on it. So my question is that I'm already a business owner. So for sake of clarification, what are these things that I can legally do that will not make me to avoid tax as a CEO? Because I now run a business of food production.
Deducted from your paycheck, from your taxes, and of course rent. Rent is capped at 500,000, 20% of whatever your rent is. So these are all. If you just Google what are the tax exemptions, it will give it to you. We're just trying to add more color to these things. And like I said, the only thing that to me that allows you more, should we say, flexibility is the pension side, the additional voluntary contribution, because there you can do much more. You can do more and you can withdraw more after 5 years. So I would advise that you go back and listen to the recording, or you go online and just listen there. It will give you just much more. Yeah.
All right. Thank you very much.
You're welcome. Let me get is Zona? Ichizona. Is it Ichizona? All right, Ichizona is not ready. Let's get Ephraim Oharuzike. Ephraim, hi.
Oharuzike, yes.
Lovely. Sorry, so how are you doing now?
I'm very well, thank you very much. Now, my question is, I have two questions. One is, I'm a gynecologist and I freelance. I don't have my own hospital. So I get patient, I get referral because I have a special skill. I get referral, people refer patient to me, and the patient pay money into my account. I have hospitals that I use, so I pay the hospital, I pay my vendors, I pay everybody after the whole transaction. Please, how can I navigate this whole tax thing?
Do you have are you paying individual, or do you have a business that you do under a business?
No, I don't. The money comes into my personal account.
Okay, now, so you, number one, to go from hospital to hospital, you can write it off if you have a business. So you have to set up a business tomorrow to do this activity so that all your income comes to your business and all your expenses also go to your business. That's going to be the easiest thing to do. The rest, of course, is going to be this: you're getting your open up. You have a pension account. You have to open a pension.
PFC top of my pension, and they were like, "No, I can't do it because it's something like that."
They don't know what they're talking about. So go to a new PFA. You can make as much as you want. I think you can make up to 1/3 of your income in addition to your account. So you can do an additional voluntary contribution. I advise you do that because it will reduce your taxable income above the line, which means that as a doctor, you should be paying a lot of taxes. But when you do additional voluntary contribution, you are bringing your tax income lower, not just expenses. You are bringing your income lower. So you definitely to do additional voluntary contribution. I think you should do that. So I would say in terms of order, go register a company tomorrow. Go to your PFA, they tell you the same thing, go to a new PFA, do additional voluntary contributions, then think about how you can also, in your business, capture all the expenses to reduce your taxes. That's what you should do, sir.
All right. So my second question now is, maybe Infobina is still on the...
He's left.
On the call.
He's left.
Yes. I want to know, is there any peculiarities? I heard that there are some peculiarities to taxation that goes to the hospital, to a hospital, because up to now, Nigeria still treats healthcare as social service.
It doesn't matter for you because you're not the hospital, and you.
Yeah. So because the easiest thing for me to do is to set up an hospital.
You still pay tax.
So, okay, the hospital still pays tax.
Everybody pays tax.
I have friends who own hospitals, and they say that they don't pay tax, that the tax that the hospital pays for the staff, the personal income tax of the staff there, that government look away from it because Nigerian government treats healthcare
that's
social
false.
service.
That's false. Especially going forward, everybody has to pay income tax. Yeah, everybody's going to pay income tax. So that's false. When you pay salaries, the hospital would reduce its taxes. Then the staff that receive the salary have got to go and file personal income taxes.
Okay.
Yes, sir. All right, Ephraim, gotta let you go. You're very welcome. Yep. Let's get my senior father too, Mar Belenge.
Hello, good evening.
Good evening, sir. How are you doing today?
I'm doing fine. Nice speaking with you. You advise I continue with this company because I don't want to have issue with it and start on a clean sheet, paying my tax and the rest of them.
Honestly, it's a difficult question because I'm not the FIRS, right? What I will say is that if you start to pay your, we're trying to give a lot of information because we can't say we just exactly, sir.
Okay, no problem.
Fantastic.
Thank you so much.
You're very welcome. Smart Pro, what's up, man?
Good evening, Mr. Carlo.
How you doing, sir?
Good evening, sir. Thank you for this, for what you're doing to enlighten us about this tax law. My question is not much. I just have two questions. The first one is I don't know if you have already explained it because I actually came late before you've already started live before I joined. So I want to ask, if I receive a dividend from a share that I acquire from a company, will I pay tax on the dividend?
It has got to be hold on, let me mute you. You have audio. It's got to be a collective investment scheme to avoid taxes, personal income taxes. So if you buy from a collective investment scheme, right, then those are exempt. Collective investment scheme. If you just buy